Hi guys, it's Chris Lamb. It is Thursday, the 1st of August, and I wanted to send out a video in response to a lot of questions our office has been getting about the Fed cutting interest rates yesterday on the 31st. What's important to remember is, when the Fed cuts interest rates, it doesn't directly impact mortgage rates. So yesterday, for the first time, for those of you that weren't aware, the Federal Reserve cut interest rates by 0.25% for the first time since 2008. So a lot of people just thought that interest rates might have went down by 0.25%. What's important to note is that when the Fed Reserve cuts rates, that rate is the rate that's directly tied to banks and credit unions, etc., as basically the cost that they're borrowing money from the Federal Reserve for. So it would directly impact home equity lines of credit, auto loans, credit cards, etc. But mortgage rates are tied to mortgage-backed securities that are traded on Wall Street on a daily basis. So how does this affect mortgages? Well, mortgage rates as a whole, and I've been talking about this all year long, are lower than they were this time last year. And as a result of the Federal Reserve dropping rates and the thoughts that maybe our economy is not as hot as everyone thought it was, has had an impact on mortgage rates. And rates currently, as of today, are slightly lower than they have been over the last few weeks. As we head into the end of the year, it will be important to watch the Federal Reserve to see what they continue to do, as it will have some sort of an impact on both stocks and bonds, which again, bonds affect interest rates. I won't get into the meeting yesterday, but one thing the Federal Reserve did say is that this wasn't necessarily something they were going to continue to do. They made a comment saying that it was a mid-cycle adjustment, which no one really knows what that means. But what we were all kind of looking for is this an indication that our economy is not as strong? Are we in a recession? Are you going to continue to drop the federal fund rate as we go into the new year? And there really wasn't any language that suggested that. So, as we head into the end of the year, what's important to note is that rates are really good right now, and 1 out of 3 people can refinance. People that are buying this year compared to last year are probably going to see their mortgage payment several $100s a month lower than it would have been had they bought last year. So it's still a great time to buy. We don't think rates are going to be going up anytime soon, and I think it's important that we all just kind of pay attention from here and see what happens. So if you have any questions on mortgage rates, what happened yesterday and how that affects you, feel free to call us at the office. And as always, I would love to talk to you about anything real estate or mortgage related. Have a great day.